Good morning, traders. Today we are taking a close look at gold. It's falling on Monday. We're below the 5K handle, which might seem strange for some, given that geopolitical escalation over the weekend. The U.S. military struck Kak Island, which is Iran's main oil export hub. And in response to the crisis in the Strait of Hormuz, also President Trump announced an international naval coalition to escort commercial ships, which Iran counters by offering to let tankers pass, provided they don't belong to the US or Israel and they trade their oil in Chinese yuan. So why is gold dropping amid all this chaos? It comes down to the US dollar. Safe haven flows are bypassing gold and pouring directly into the greenback, pushing the dollar index back above the 100 handle. Meanwhile, the energy shock being the main driver has also crude oil surging towards the 100 barrel, with Brent oil above the $100 as well. This means central banks, especially the Fed now, are especially blocked from cutting interest rates. Right? In fact, we're heading into a super week of central bank meetings, and markets are pricing out Fed cuts entirely. Higher rates and a surging dollar are like, a might be sort of damaging for gold in the short term, but in the longer term, due to the need for hedge for inflation, we might see this turning around. So we have talked about the 4-hour chart, okay, and we've also warned about further downside. We identified the 38.2 Fibonacci as the next level, and below that, the 23.6. We're looking at waves E and C of this potential triangle pattern, right? We also talked about, as an alternative, the potential for all of this to be a correction. Now, if 78.6 holds at 4,960, then we could see prices eventually turning higher. For example, given the RSI still needs a little bit more to go over. So we could see something like this and move higher, but without breaking 5,230, the peak that we saw back on the 10th, then it is unlikely that will continue higher. But if we do, then this would essentially mean that this is a 5-wave move to the upside, this is a correction, and we're going to continue to higher territories. Now, we mainly focused on the potential for a 5-wave move to the downside. This didn't take place, and instead we saw a consolidation that actually took us a little bit longer to complete. This is a flag pattern. You could call it anything you want. I don't think it really matters what it is. What matters is that it is a correction primarily. So we've broken below that level of 5,070, and we did a new low just earlier on Monday. So if this would be considered an ABC correction, we would be looking at the 4,815 to be our potential level of reversal. But if you consider that this is below wave V, then it is unlikely that this is going to be a correction. Okay, so what a correction following this impulse? So what it could be is a correction that continues as part of another correction. We did note that this could turn into a pennant or even a triangle and then move higher up. So if this level breaks, this is a very important level, I think, that we have to pay attention to. Then we're looking at 440 and then perhaps further downside in the longer term. So currently, we have talked also about this like dead cat bounce a while ago, which didn't really play out as we suspected. But what I wanted to show you is the power of fractals here. And there was this tool called bar pattern. There we go. And I want to show you from here all the way to even this. This is the pattern that we currently see, the price action. Now, if we do come and make this much smaller, right, and take it and actually stick it over here, you're going to see that essentially we had a very similar pattern playing out over here, right? I cannot go as small, it looks like it, but you see it's a very similar pattern that we are facing here. We had double top here, move to the downside, another peak, and then following downside, okay? Now, this doesn't need to mean something, but the point that I wanted to make is that in case we do see a downside, we'll have to use the smaller fractal to reverse engineer the initial fractal that we saw from a larger pattern to a smaller pattern. So we could, for example, if we go lower and we saw something like this, right? Then we could essentially take this and try to magnify it in this larger time frame and see where we could potentially end, okay, to the downside. But obviously we have identified the most important levels, which is the 30.2 and the 23.6 for now. So currently the entire drop from the 5,600 peak is being viewed as a deep macro correction. If 4,860, let's say, holds, the broader bullish triangle pattern remains alive. However, if we lose 4,680, then the risk of a total structural collapse back down towards the 4,400 increases dramatically. So I would really watch that 5,000 level very closely today, because if we close below it, and then for two consecutive, actually for three sessions to be fair, so the daily is also important to look at, then we could be looking at further declines. On a different point here, we have taken out the previous low, okay, taken it out, regardless of how much we have fallen based on this initial leg. And let's just actually see this quickly. We did the 61.8. That might eventually be our peak. So it is important that, to see how this is going to close tonight is very important. Okay, so pay attention to that number, and I'll see you in the next video.